Hold on, let me stop this. Awesome, awesome. Thank you for being here today. Um, for selling, knowing how to sell your business and knowing your numbers. For those business owners that are out there that are considering selling their business, they've been in business anywhere from, if you've been in business from 2 to 3 years or more, you would, those are typically the amount of years that are needed. But now we're going to talk about what is also needed besides those years being in business, which is great because you have to have some financials to show when you're typically selling your business and trying to make a profit. My name is Jesse Burton with Elevate Business Advisors, and I'm a real estate professional by trade, as well as a business broker, and I have over 2 decades of experience here. And there are some things that I come across here when helping business owners try to sell their business or looking to sell their business. And so what I wanted to do is bring on a very special person today, a very special guest, Uzman Ture, here with us, and I'll let him introduce himself and allow us to, know who he is and what his past history is. Go
Yeah, how's it going to the folks in the audience and to the people that are watching the recording after? My name's Usman Torre. I've been an accountant for 16 years now. Very long time, I know.
ahead.
Right?
16.
I'll spare you the gruesome details of how I got here, but I am the founder of an accounting firm called Your Big Bank. And recently, in the recent years, I pivoted to M&A accounting as my specialty because I saw too many businesses lose value while they were in the middle of the sale process. And it wasn't because they weren't profitable, but it was more so because their numbers didn't hold up under pressure. I've worked with founders in pretty much high stake environments like raising capital, securing loans, preparing for acquisition, or cleaning up messy books right up until due diligence to the point that the due diligence period was extended just because the books weren't ready. So I saw firsthand how smart entrepreneurs pretty much are let down by either their accountants and more often by themselves because they didn't have financials that were built for the investor scrutiny. And that's pretty much where I come in, where I have come in the past, and I still do to this day. And I'm looking forward to shedding some light on what it really takes to know your numbers and get them right as you're preparing to sell.
Perfect, perfect. Thanks for sharing that, Usman. And you do have an extensive background with accounting, which is awesome, and that's really needed in this industry. One thing that I found an issue with most sellers, not because most sellers they may not be educated at this process or with this process, and sometimes what they're normally doing is they may be hiding some of those profits from Uncle Sam, and we all know who Uncle Sam is, right? And so when you're hiding this, and it's very similar to real estate, when you're getting ready to make purchases, you can't make those purchases if you're hiding income, because what's going to happen, you're only going to qualify based on the income that you're showing. And so the same thing when you're selling a business. So your numbers would need to show, I would say 2 to 3 years. If you have 3 years, that's awesome. And we need to be, it would be great if you're showing a nice profit. If you know you're going to sell, start if you have an ideal anywhere from a 2 to 3 year window, you looking going to be looking to sell. You don't have any family members who want to take over the business. There's no children involved, and you're just really looking to cash out and set sail somewhere, right, into retirement or into something totally different. Well, what we want to do is prepare you for that process, prepare you for that moment. The thing is that what you show on paper is what's going to qualify your business, your numbers, and we would like to try to help you get the maximum profit out of that. And if you're not doing that, if you're hiding that, we want to catch you now. We want to catch you guys early so that way you know what to prepare for, you know what to do, because you can't just sell your business based off emotions, right? You may know what you're really making at the end of the year, but if you're not showing that on paper, then it's going to be hard to get that for you. It's going to be impossible. So I shouldn't say hard. It's going to be impossible because your business has to not just qualify, with as some numbers as say for instance that Usman will look at and kind of tell you what your business evaluation may be, what show you your income, what you able to kind of add back to the business, whether you're be paying yourself a salary, you may have some other expenses that the next person who's purchasing, they may not need that, right? So you may be able to add some things back into the picture, which will help increase your numbers. But if we don't see that on paper, we wouldn't know, right? And the person who's looking to purchase your business, they have to qualify. They're going to qualify with if they're not paying cash, or whether they're paying cash or not, or if they're using a lender, some financial institution or an SBA lender, well, they're going to ask for the seller's financials because they're going to also evaluate the value of your business based off of that information. So, Usman, you dealing with sellers. Let me ask you this. Typically, what's some of the documentation that you would like to see to kind of help you do your job?
Yeah, I mean, first and foremost, I will need the standard financial statements. That's a profit and loss. I'll need the balance sheet. If the business is a little bit more advanced, I'll ask for the statement of cash flows, and then 1 or 2 years tax returns, usually 2 years. And then the first thing I do is I start to see, does this profit and loss statement match what's on the tax return? And obviously, there's a difference between tax financials and business financials. I know, but I look for wild inconsistencies. Like, for example, if your business financials say you have 5 million in revenue, but on your tax financials, I only see 2 million in revenue.
Yeah,
Ask what's happening here, right? Uh,
right.
and it's very common for businesses to have two sets of books. Um, just in the past year alone, I've run into 15 clients that had two sets of QuickBooks, not
Wow.
alone different tax financials from their business financials. So I always look for the financial statements just to make sure everything adds up more or less, you know?
Awesome, awesome. I like that. I like that you are aware of most of these sellers or the owners having two sets of financials. I'm sure one of those sets of financials is to show what they are truly making, and then another one is to kind of some of that is I would say is a little bit hidden. And so, what are some of the things that kind of circumvent um, some things that may possibly come up to allow you to kind of move forward with helping that business owner that who's looking to sell kind of I would say miss out or not miss out on any opportunity, golden opportunities.
Well, the biggest one is profit, right? Because there's two different kinds of business valuations that are commonly used. One of them is the enterprise value multiple, where your business gets valued at a multiple of your profit, right? That's why profit's important. And the other one's a discounted cash flow, where your future cash flows, usually your profit, are going to be discounted to today. So if you mess with that profit number too much, you end up cutting your valuation just by default, right? And so
Right,
I always tell business owners, if you want to sell in the next few years, make sure you mind that profit number. And if it turns out that you have to pay higher taxes to have a higher profit, pay those taxes because the amount of money you pay in taxes, you're going to end up earning multiples in valuation.
right,
So you don't want to miss out on that. And there are ways to use tax planning in advance to make sure that you don't end up paying too much taxes. Just because your profit's high doesn't mean you have to pay taxes. It just means that you have to figure out how to maneuver so that you don't pay taxes. And Jesse, for example, you work with real estate, right? You work with
right,
businesses related to real estate. Real estate
correct,
is usually a great way to use the depreciation or the interest on the loans or different factors that we're not going to get into right now to
right.
cut down the amount of taxes that you pay while keeping a high valuation and a higher profit.
Awesome, awesome. One thing I was going to ask you, what if that business owner has some debt that's, I would say, attached to some of the items that may be a part of that business? You know, when they're getting ready, when they're selling a business and they may have some furniture or some equipment that still has a loan that's attached to that particular equipment. What would you say in this case? Would they pay off the loan for that equipment to allow the next owner come in? Because I'm sure that, you know, many times the person who's looking to sell, they're like, well, I don't know if I want to pay off that. I'm not going to pay off this. You know, this is not going to be mine anymore. The next person who's buying it, this is going to be their use, this their equipment now. You know, what would you say in a case like that?
Yeah, well, that typically the recommendation comes on a case by case basis, but I think it makes sense to discuss the options here since you brought up the question. And one of those options is when you sell that business, you can transfer the debt over to the new business owner, and it just decreases from the cash that you get. So you're effectively paying off the loan without actually paying off the loan, if that
Okay.
makes sense. So you're just
Okay.
transferring it to someone else. So if your business was going to sell for $1 million and you had 200,000 in loans, well, the new business owner would only pay you 800,000, and that would go in the purchase and sale agreement. So that's one option, of course. The second option is you could always pay off the debt. Now, the question becomes, is this an asset that has a long-term value to the business, right? If it's chairs, if it's furniture that are more than likely going to get replaced anyways, it might not be in your best interest to pay off the debt, or it might be. It really depends on who your buyers are and what they're asking for. But the option to transfer the debt to the new buyer is always there.
Okay. And it also depends on what that offer is too. You
Correct.
know, that's a huge part of that. Now let me ask you this. If they are, say for instance, if they receive a certain amount of money, offer on that, and they decide to go ahead and pay off of those loans or liens that are attached to some of that equipment, would that be also considered a write-off at the end of the day?
Paying off a loan is not considered a write-off. And this is something very important that I always tell business owners. When you pay for the interest on the loan, that's a write-off. When you buy the equipment, you can depreciate it if you hold it for its useful life. You can depreciate it, but the actual activity of paying off the loan is not a write-off. The write-off comes from the depreciation. So you have to make sure that you're matching your loan payments with the amount of depreciation that you're getting in that period so that you don't end up having to pay it with after tax profits. And that's something I always tell people to be very careful about. Matter of fact, for all of I have retainer clients. For my retainer clients, what I typically do is I help them calculate what their after tax profit is so that I can turn around and look and tell them, hey, look, this is how much after tax profit you have. So this is how much money you can allocate towards paying loans,
Mhm.
paying yourself.
Let me ask you this because I came across this scenario last year, and there was a business owner who was set up as a nonprofit, and this nonprofit they didn't have their books in order, and they wanted to sell their business at a certain number, but the books didn't show that, and there was a company that was involved. Were going to there was an actual buyer that was looking to purchase, and the buyer said, "Hey, I want to use this business evaluation company." So that way they can help me evaluate your business. I love the real estate. I want to buy the real estate, but I don't want to buy the real estate without the business. And if you can show what your business is actually valued at, we would move forward. And it took the seller forever to produce any documentation when it came to that, any additional documentation. And their books were not in order. Do you ever come across any nonprofits that you deal with? Would there be a different approach that a nonprofit would have to make compared to a for-profit business?
Yeah, that's a good question. There nonprofit accounting is slightly different than for-profit accounting, and even their tax returns are different. So, number one, I would question how they're able to keep their nonprofit status if they don't have financials, because how are they filing their nonprofit tax return?
Right.
But in terms of the actual process of what it takes to get the books ready, it's exactly the same. You still need to have your bank statements. You still need to have all of the supporting documents like invoices, bills, right? And then you can use a software like QuickBooks to go through and categorize all the transactions that you've had. Um, if it's a smaller nonprofit, it can use cash-based accounting. If it's a larger nonprofit, it can use accrual-based accounting, but the process is relatively the same. Now, that means it still takes time, right? If you haven't done your books in 3 years, they're not going to be done in 2 weeks.
Right.
That's just not necessarily unless you have a low transaction volume, right? If you have a
Right.
high transaction volume, it's going to take some time, but it's almost always worth it to take the time to do your books, to clean everything up, and to show the seller the real numbers
Mhm.
that they can pay what your business is worth rather than trying to go into a metaphorical knife fight. Like, I think it's worth this. I think it's worth this. And you guys are
Right.
just going back and forth, but there's no facts involved. Like you said earlier, it's just emotion.
Right, right. And then let me ask you this: there's what kind of software would you recommend these business owners to really have? We may be able to reach some individuals who we catch them before they, get ready to start making this transition, and they may be using something that's outdated. And we know technology is always changing. What kind of technology or what software would you recommend business owners to use to do a better job of keeping their books in order?
Yeah, so just a few softwares. Number one, first and foremost, I like to recommend QuickBooks. I've been a QuickBooks Pro advisor for a long time now. I don't even know how long. It's been over 8 years at this point.
Okay.
So I always recommend business owners use QuickBooks. But if you don't want to use QuickBooks, there are other softwares out there like Wave, which is free. It's a little bit more complex than Quick. It's simpler in at first, but if you're trying to book complex transactions, you're gonna have a really hard time with Wave. Um, I always recommend business owners use some kind of merchant service like Stripe, Square. PayPal. I'm not too big of a fan of PayPal. And there's many others out there that can collect the payments from your clients, and then they'll give you a statement with all the payments that have come from your clients. That way you can reconcile that to the revenue number, and then you can show that to the seller, right? So those are two really big ones. Obviously, you want to have a bank, right? And the
Right. Oh, yeah.
online banking.
Look, you got to have that.
Well, you'd be surprised. Some people, well, let me clarify. You want to have at least one account with a very large bank like Bank of America or Chase
Uh-huh.
because their IT, their API connections, their tech connections to the other softwares are going to be very seamless. A lot of
Yeah.
times, if you have a credit union, yes, you save on fees, but what you save on fees creates a bigger headache with the accounting because a lot of those smaller banks don't have large IT departments, so you can't import your transactions into the accounting software. That's very important. And that ends up holding people back because the harder it is to get your transactions into the accounting software, the less likely you are to do your books. And then there's another software I like called Get Sequence, which can automate transfers between your accounts. So even if you have a smaller credit union,
Uh-huh.
you can have a larger bank account, a larger bank like Bank of America or Chase, and then you can use Get Sequence to automate the transfers between the accounts. So you can almost live in the best of both worlds. So just to recap, it's the accounting software, the merchant terminal, and one large bank, along with potentially Get Sequence that can automate transfers between your accounts.
Awesome. That's some good information. I actually just had a conversation yesterday with an individual. He just so happened to be a business consultant with Chase Bank, JP Morgan Chase.
Right.
And he shared with me that they have more tech guys than Google. And I couldn't believe that. So you're recommending, Chase or a Bank of America, which is, those are some large financial institutions, right? And so in order to have those APIs to meet and match up with your and sequence that you can in sync with some of your other items that you're using is always great because you always want to be able to track what you're spending, what's going in, and what's coming out. And so I'm glad that you did mention that and pretty much kind of confirm what the individual told me on yesterday. So, that's great to know. My thing is, we're going to be wrapping this up here soon. This has really been great. I appreciate this. Again, you taking your time out. One thing I wanted to kind of make mention of here myself, being a business broker, depending on the type of business that you do have, a lot of times what we'd like to do is we would go off based off of your profits, what you're actually able to show over those last 2 to 3 years. The way we come up with your value of doing that is we'll multiply what you actually made and can actually show by 2.5 times that number. And the thing is, really depending on that your type of industry it is, it can actually exceed that 2.5 times that number, because that in a particular industry, some industry are hotter than others, right? And so we know now that SaaS is huge right now. These software companies are really huge. IT, that
And AI.
yeah, that AI is big. I'm coming across individuals who have been in business for there. I mean, they're selling businesses that they've had for the last 2 to 3 years, and they're starting a total new one, And so, I mean, it's amazing how they're doing this, and so I just think there's going to be an influx of these AI companies, these software companies that are going to be looking to sell, because there are going to be more inches of buyers who are looking to purchase these, because the individuals are really too. I think we are in the days of individuals looking to work remotely. There's not a lot of people looking to go into these offices anymore, and like the old days before the epidemic, before COVID. Um, you know, Individuals now, when they start searching for jobs, they're looking for something that's remote. And so, and it makes these type of businesses really hot and attractive. We know that technology is needed. I had one of my clients on yesterday. We were talking, and while we were talking, she was at the she was at the phone store, at the store. I think maybe a T-Mobile or whatnot, and her phone went out on her earlier. I think she said she was on the phone for maybe 2 days or something happened. It went out while she was on it. And I had a friend, a good friend of mine, his phone, he believed it got wet. He thought he could get it wet while he was in Cancun. And he was out without a phone for a couple of days. And so he had to hurry up and replace his phone, because he uses his phone for work. He works remote, and a lot of times these VPNs and all of that are set up through these phones, through these apps. And if you don't have those apps on your phone, your job is in danger, right? And so, but any type of business that you're actually seeing out there right now that are selling mostly, you can think of?
For me that I'm seeing,
Uh-huh.
um, I'm seeing a lot of the trades actually, like electricians, plumbers, HVAC. That's currently what I've been seeing moving at.
Those are very hot businesses right now that I
Yeah.
see a lot of marketing that comes across my social media platforms for HVAC business owners who and these are really some of the marketing that's coming across my platforms are really trying to help these HVAC companies increase their business, and their profits, because there's ways, because typically we realize that most of these individuals and are maybe a little bit of an age, right? They may be baby boomers, and so they may not have all the technology that some of these millennials are actually using now. And what I find is that these millennials are coming in and they're buying these businesses and implementing new technology. And new technology is going to help increase visibility. New technology is going to help increase. It's going to help increase sales. Increase marketing. So if you increase in visibility and you increase your marketing, that's going to increase sales, which automatically increases your profits. And so these millennials are now, like I'm educating them now, is that it's best to purchase a business that's already up and operating than to start a business from ground zero. Those businesses are also easier or less difficult to get funding. you know um, there are different ways to to finance those businesses, right? You could, you may have a lender or SBA lender who would finance a certain percentage of that business, and you may be able to do some type of, I would say, alternative financing with the seller, to kind of help them get out of there, and then turn around and able to pay them off within, I would say 2 to 3 years, if not sooner, because there's look, we went from talking about knowing numbers to talking about financing now, different ways to that these new business owners that are looking to purchase and go in there and attract. That may be something we can talk about next time here. When we
Let's tie it in, really. If
Yeah,
you don't know your numbers, how will you ever get financing?
right. Exactly.
Right.
Exactly. So, and that's another reason too, we have to catch these sellers before they get ready to sell, while they're thinking about it. It's because the incoming buyer would need to have that information over to their um, the person who's or the institution who's looking to finance them, because they may have multiple ways to move forward. There may be multiple ways for the business owner to exit, and if you don't show the numbers, if you don't show on your financials what you're really trying to get, but the buyer really wants to give you that number and trying to make it happen, there may be some things that you can do separate from on paper with that financial institution, and then have something separate with that buyer, between you, that buyer, and something that you agreed upon on some legal documentation, moving forward. Anything you would say on that right there? If the seller is not showing their numbers, that they really, if they're off by, a bit, but the buyer's really wanting to give them help them reach that. Honestly, if a buyer's really trying to help you reach that, they really look out for the seller, because honestly, buyers are coming in and they want to negotiate a little bit, right? And so, but if someone is really trying to help you get your numbers and are trying to get to the number where they were comfortable with, but then they come back and find out that their lender saying no, we can't do that. Um, what would you say in something like that?
Well, a popular option there is to just purchase the assets of the business, right? So you can just purchase the assets of the business. That could be a customer list, not just the equipment, right? That could be a
Right.
customer list. That could be intellectual property like a patent or copyright. That could be a piece of software where the lender can value the asset better than they can value the business, because the reason why it's difficult to value businesses is that there aren't too many comparable sales happening in any particular geographical region. So it's not like a house. You can find three houses that sold on your block. You're not going to
Right.
find three businesses that sold on your block. But when it comes to the assets to generally have a market value because those assets are being used by businesses around the United States and even around the world. And so you can come up with a comparable value more easily. So one of the alternatives is, if the seller doesn't have their numbers, is that they'll just sell their assets. The problem to the seller is that that usually doesn't get them as much value as they
That's correct.
otherwise would have if they had
Right.
their numbers. And so you really just, you're hurting yourself by not knowing your numbers, by not getting them right, and by not doing it well in advance of the sale of your business.
No, that's a great point. We do come across some business owners who are, that I wish that I could have caught them before they did those taxes, right? Because now you go from selling assets, like there's individuals who may have assets and may have real estate, but instead of selling assets, real estate, and the business to maximize your profits, that's thrown out the window now because your financials not in order. And you can make something at the end of the day, but you got to remember too that those assets now are they're worn, right? And so you're not going to get the actual value for those assets as what you may have paid for them. And so again, let's make sure at the end of the day that your financials are in order, and we're here to help you do that. If you're thinking about selling here within the next, I would say, now that we're here, and we'll be hopefully meeting the audience here soon. But if we can catch you here within the next 2 years minimum, or you catch you now and looking to sell at the 2 years minimum, or and above that, beyond that, we're here to help alleviate those issues, help you sell and set C to your next endeavor, you know. And so, any final words from you?
Yeah, for just to add on to what you just said, for any business owner who is looking to sell, if you just want me to take a free look at your business, at your current financial situation and how well you've put together your numbers, I can do that and then give you an estimate of how much time and work it would take to get your financials to be investor ready, so that when you do run into that buyer, they're not going to poke some holes into your financials that you don't have answers to. But I'm not saying that I'm going to charge you for the service. I'm just saying I'm going to, for free, give you an idea of what it would take to get you from point A to point B.
Awesome. And thanks for even offering that. You know, a lot of times, unlike I don't want to give attorneys bad names, right? But a lot of times you're gonna the attorney's gonna ask you for some type of retainer up front before they even, they start taking notes. And so, but for you to offer something like that, Usman, I really appreciate that. I'm always looking to, to give back and see how I can help on my end as well. And so what we'll do, we're gonna have our information shared to where you're able to reach us for any assistance with your needs and what you're looking to do here in the near future. We'll have some places where you can also reach us and educate yourself on some things that are needed, moving forward with this particular process. And so again, we thank you for taking your time out watching this, whether you're here live or you're watching the replay. My name is Jesse Burton, and we have Mr. Usman Ture here, who joined us here today um, from the somewhat the East Coast.
Yeah, I'm on the
Oh,
East Coast.
okay. We're just enjoying. I'm sure his weather may be better than my weather, because I'm down here in the South where it gets hot in the summertime. But again, Usman, I really appreciate you doing this, and I look forward to the next one. And where we can continue to help these business owners that are looking to sell, and then even talk to some business owners who are looking to purchase and helping them know what to look for and what to expect going into business for themselves. So. Again, thank you for your time, and I look forward to speaking to you soon.
Thank you very much. I look forward to speaking to you as well.
All right, thanks.